A very good evening to members of ICI. We extend a very warm welcome to all the participants on behalf of Ethical Standard Board of ICI on today's VCM on responding to non-compliance of laws and regulations and taxation service to the audit clients. It is indeed a pleasure to welcome and extend greetings to all the dignitaries for this program. CA Manoj Fadnis, sir, the past president ICAI, CA Mangesh Kindre, sir, chairman Ethical Standard Board, CA Ranjit Kumar Agrawal, Central Council member and member ESB, and CA Rachamla, sir, Central Council member and member ESB. With this, may I request CA Mangesh Kindre, sir, chairman ESB. He is also chairman of Valuation Standard Board, vice chairman of Audit Committee, and members of various standing and non-standing committees of ICI to please welcome his address. For his welcome address, sir.
Thank you, Rashmi. Good evening to all. My respected past president of ICAI and the faculty for the first half of this virtual meeting, CA Manoj Fadnis sir, my colleagues in the Central Council and members of Ethical Standard Board, Ranjit Agarwal, who is also a speaker in the second half of this session, and CA Dr. Raj Chawla, who is also going to moderate the session later for question answer session. And of course, my professional colleagues who are joining this virtual meeting online. My heartiest welcome to all for this first ever meeting in this council year of Ethical Standard Board on a very, very important subjects or important topics which are relevant for the profession in the coming years. Friends, today we are going to have deliberations on two new provisions which will be implemented very shortly by ICI. These are non-compliance with laws and regulations and taxation services for audit clients. We have specifically called it as a deliberations because what is expected in today's session that we will have a guidance and the understanding of this provision from these two eminent faculties. At the same time, there will be some issues in the minds of members that can be addressed by our panelists. At the same time, there can be some suggestions also which the members can forward, because these being a completely new provision and perhaps coming as a complete new aspect for the Indian practitioners. Friends, we all know that the Institute of Chartered Accountants of India is a member of an International Federation of Accountants, that is IFAC. And IFAC has its own standard setting body as far as ethics is concerned, that is International Ethics Standard Board for Accountants, that is ASBA. Now, ASBA comes out with the ethics code of ethics for public accountants or the accountants throughout the world. Each member body is supposed to adopt and adapt these ethical standards as per their local conditions. In 2018, ASBA has come up with this three provisions, perhaps which were not there in our code of ethics earlier, which were not there in code of ethics of ASBA also. And out of these these are these two provisions which are very, very important. Our institute has adopted that 2018 edition of ASBA Code of Ethics, and formally we have come up with our Code of Ethics edition to 2020. It got implemented from 1st July 2020. However, considering the scenario that time, you all know we were suffering from this pandemic. The entire world was suffering from this pandemic, COVID, at that time. And since these new provisions were there, Council thought it fit that proper awareness has to be made, which could not be made in that COVID period. And therefore, these provisions were deferred. These were deferred later on, again, because of the second wave. And the implementation date was actually 1st April 2022. However, again, you will appreciate that we had not come out with this COVID syndrome in 21, better half, I mean, most of the half of the year 2021 also. And therefore, we could not make that much awareness. The members were not that much aware of these provisions, how to make themselves ready, what changes have to be made, what kind of a documentation, additional documentation will have to be done, what kind of additional KYCs will have to be done as far as clients is concerned. So all these respects, perhaps the membership at large was not ready, and therefore the council again thought it fit that we will extend it for 6 months time more. So in a meeting in the month of March 2022, the council has extended the implementation of these provisions by 6 more months. Now, in that time, the mandate has been given to Ethical Standard Board to make aware about people about this new provisions. Let me tell you, friends, from Ethical Standard Board, we are now making this awareness programs, and this is one of its kind in terms of virtual program. We would like to have it spread out in more and more cities, physically also and virtually also. In addition to that, we will be coming out with certain publications, certain material also for the benefit of the members. Further, as far as non-compliance with laws and regulations is concerned, which Manoj Fadnis sir is, which Ranjit Bhai is going to deal with in later half, we have also started holding a physical meetings of auditors of listed companies. We had a first meeting in Delhi couple of weeks back in Delhi, and we would be having it in such major cities. And we may also have such interactive meeting regarding NOCLAR virtually also. The purpose behind this is that when we are bringing this provision in India, we know that it is completely noise or completely foreign provisions for us. But at the same time, it should be implemented properly in letter and spirit in India. And that is always an endeavor of Institute of Chartered Accountants of India. Further, the regulators are also looking up towards the ICAI as far as how we are coming up with the implementation of these provisions. As far as taxation provisions are concerned, which Manoj sir is going to deal with in a short span of time, these are again provisions where Indian scenario, auditor and tax consultant are seen as a one person only, and perhaps we may have to change approach at least to some extent in the coming years after because of such provisions. I know members might feel that why these provisions have to be implemented, but friends, we are part of IFAC and we are abided by this code of ethics which are internationally followed. Whether we can do it in this format or whether we have to adapt it in an Indian format, that of course Ethical Standard Board and Council of the Institute will definitely dwell upon. I also therefore call upon members to give your suggestions, but at the same time, we have to take a decision within these four corners or within these four walls of the International Ethical Code of Ethics, which have been published by ISPA. I'm pretty sure that this session and such sessions, members will take a benefit from such session and get aware about these provisions. And when this will be implemented in the coming months or a year, then definitely we'll be ready to face such, whatever documentation and whatever kind of a preparations we have to make internally, we'll be ready with that kind of a preparation. And therefore, these efforts of Ethical Standard Board, I expect that the members should support in terms of the contribution, in terms of suggestions, in terms of raising the issues, in terms of participation also. And therefore, we have not called it as a lecture on so and so. It is called as a deliberations on these two provisions. I am very much thankful to Manoj Fadnis sir and Ranjit Agarwal sir for agreeing to deliberate on these issues with the members. And I am also thankful to Raj Chawla sir for last moment. He's agreeing to be a moderator in the question answer session at the end. Friends, let me conclude by saying that this is an inclusive approach is adopted by Ethical Standard Board and Institute. And definitely the learning in these provisions is very relevant for us, not only from the perspective of today I may not have a client in this, but tomorrow if I'm venturing in such kind of a practice or such kind of audits where this NOCLAR is applicable, or today I may not be having a taxation client, but I'm doing an audit and taxation client comes, or whatever appeal client comes, and what can be my approach? What should be my documentation? What should be my preparation for these provisions? And I think, therefore, your involvement and your active participation in this is very much relevant. I'm very happy that today also there are a large number of members who are attending this deliberation and this first program of Ethical Standard Board. So I wish you all the happy learning and expect your participation in a further meetings also in a similar manner. Thank you very much again to everyone for active participation and wishing you the happy learning for this session. Thanks a lot. Thank you very much. Over to you, Rashmi. Please start the session.
And thank you, sir, for giving insights about today's VCM and about today's topic. Now I would like to invite Manoj Fadnis sir for the first session. I would like to give a brief introduction about sir. He is the past president of ICI for the year 2015-16. He has a vast experience in area of taxation and auditing. He has represented ICAI at various international forum. He has presented more than 1,000 technical papers in seminars and conferences in India and internationally. He has been nominated on B20 for the year 2018. He has also been nominated as a member of the Standing Committee on Accounting Issues constituted by the IRDA. Now, I would like to request Manoj Fadnis sir to please enlighten the participants on the today's topic, taxation service to the audit client. Thank you, sir.
Thank you very much for this wonderful opportunity, Honorable Chairman of the Ethical Standards Board, CA Mangesh Kinnareji, very distinguished council members, CA Ranjit Kumar Agrawalji, who is going to speak on a very important topic relating to NOCLAR, and CA Raj Chawlaji, who will be moderating this session. I'm very delighted to participate in this deliberations, as the chairman very rightly used that term, because the object of Ethical Standards Board, as has just been explained, is to not only dissect the provisions which are there, but also to create discussions and give useful suggestions to Ethical Standards Board, so that the best ethical principles which are followed worldwide can be easily implemented even amongst our fraternity. In fact, I believe that the ethical standards which our members have been following, and not just recently, but right since 1949, have been far more stringent and far more robust than what ethical principles have been internationally followed. And therefore, for Indian chartered accountants, complying with the International Ethical Standards Board, these provisions is not very difficult. What is important is that we should be aware of what are these provisions which are going to come in, and then we can adjust our working in such a manner or carry out our work in such a manner that we can very easily comply with these provisions. So the first and foremost thing I believe is there is no need for us to be worried or panic about these incoming provisions. We should welcome them, because this will only in a long run help in enhancing the standards of our profession, help in enhancing the public perception about our profession as to what kind of ethical standards and principles we follow. Let me just also say that many of the principles which are there in the law today were imbibed by the Ethical Standards Board and our institute far before they became part of the law. So for instance, we have section 144 of the Companies Act, which talks about non-audit services, which became part of the Companies Act 2013 with effect from 1st of April 2014. But this similar provision was there as part of our ethical standards by way of a council decision which was taken way back in 2002, that the fees from non-audit services should not increase the fees from the audit services, thereby meaning that there were non-audit services were always under the target even of the council of the institute, and as good ethical principles were followed far before, as I said, they became part of the law. And even now we find that what is being brought in by Ethical Standards Board is not part of any statutory provisions, is not part of any law, but these are the best principles adopted worldwide, and therefore they are also being looked into by our council and the Ethical Standards Board. So just a rundown before I start and come to the specific provisions. As members are well aware, we have 3 volumes. Volume 1, which deals with the ISBA Code of Ethics of 2019. Volume 2 contains our Chartered Accountants Act, regulations and council decisions. And volume 3 contains the case laws on what have been the decided cases in respect of the disciplinary proceedings under the Chartered Accountants Act. So today what we are dealing with is volume 1. And volume 1, friends, is covered in these different parts. So part 1 is the fundamental principles. Part 2 is professional accountants in service. What we mean by members in service and members in industry. And part 3 is professional accountants in public practice. Part 4 is independence standards. And what we are talking today in relation to tax services is actually part of this part 4 about how to maintain and how to ensure that the independence of the auditors is being maintained. So in that context, we have under part 4, the matters relating to taxation services and also with respect to non-compliance with laws and regulations. So volume 1, important for us to bear in mind is that it is structured in a manner to introduce the subject, give what is the mandatory requirement. The mandatory requirement is given in the form of requirements. So there is this alphabet R which is used, which indicates that this is a principle and that is mandatorily or compulsorily required to be followed. And after that, we have certain guidance in the form of application material to explain that mandatory requirement. So these were the 5 important matters which came in when this new code of ethics was introduced in July 2020. 2 of them became part of our code of ethics immediately from 1st July 2020, prohibition on management responsibilities to the audit clients and duty of accountants in case of breach of independence standards. But what was deferred, and as of today, as the Honorable Chairman explained, is still not implemented, is responding to non-compliance with laws and regulations, which Ranjit Bhai will deal with. There is also a requirement which is to ensure that 15% of the fees from a single client, if it is for more than 2 years, then there are certain independence requirements which are required to be complied with, which is also yet to be implemented. And the most important from a practical point of view is the proposed restrictions on taxation services. So this restriction on taxation services, as I mentioned, is contained in part 4A on independence for audit and review engagements. So what do we really mean by tax services? As practicing chartered accountants, most of us are, and I would say particularly let's say the small and medium practicing firms, rendering services to small and medium entities, small and medium business houses, they would require one chartered accountant who would take care of whatever is the compliance required under the Companies Act, GST, income tax, so that the proprietor or the partner or a director of a private limited company who has limited resources is not required to attend to many professionals and therefore looks at one auditor and expects that auditor would comply with all these requirements. So it is quite common that the chartered accountant who is the auditor is also rendering the taxation services, both as income tax and in the present day context, even the GST services. Now, when we talk about tax services, the tax services are, as you would see, friends, are further divided into 5 categories. And we need to look at what is the compliance requirements with respect to these 5 categories of services, or to put it in a different way, which are the services which can be rendered to an audit client and which are the services which cannot be rendered. So the different services, as you see, are tax return preparation, preparing the income tax returns, the TDS returns, GST returns. It is these kinds of services are quite common, and this could be categorized as under one bucket as tax return preparation services. Second kind of services, and this is maybe not so much within our country, but which is globally recognized, is calculation of tax for the purposes of preparing accounting entries. So the chartered accountant, or in the global scenario, the professional accountant, as the profession is recognized worldwide, is the professional accountant is engaged as an auditor, and along with the audit services, is required to calculate what is the amount of tax which is required to be paid and what is the amount of tax which therefore becomes part of the books of accounts. Now, in the second category of tax services, there is, for an audit client, what is said is there is a self-review threat, in the sense that the auditor himself quantifies the tax liability, and the auditor then recommends that this is the amount to be entered in the books of accounts. And finally, the auditor again audits that amount, whether it is correct estimate of tax provision or not. So therefore, there is a conflict. And this is, in that context, brought out as a separate category, that is calculation of tax for the purposes of the accounting entries. Now, friends, most of us in the Indian context would be advising the chartered accountant, would be advising their clients, but the actual calculations and other things based on the information presented by the clients would be calculated by the auditors or the tax consultants. But nevertheless, the responsibility remains on the assessor. The responsibility remains on the auditor. So calculation of tax, if an auditor is actually calculating, quantifying the tax liability, as I said earlier, there is certainly a threat. There is a threat of self-review. And therefore, this would be a service which would be hit by the provisions which would come in. And I believe that most of us are not really involved in calculation of tax for the purposes of accounting entries. We could advise the client that this is the advance tax to be paid. We could advise them that this is the profit and loss we have, which is finalized based on the applicable accounting standards. And therefore, this is the tax liability which is required to be paid. In case of a non-audit client, based on the information given by the SEC, the tax amount is quantified and the tax is paid. But rarely would our members be calculating the amount and telling the client that this is the amount which you have to enter in the books of accounts as tax provision, which is what is being done globally. And therefore, in the international ethical standards, this is one separate line which has been identified, that tax calculations for the purposes of accounting entries. Third is tax planning and other tax advisory services. And we should very carefully look at what is the kind of tax advisory services which are there, and whether those advisory services have a conflict with the role as an auditor. So this is one area where we'll spend some time, and we would need to deliberate this topic in line with what is the guidance note on tax audit under section 44AB, what are the decided case laws under the Indian jurisprudence, what is the responsibility of a tax auditor, what is the rights and obligations of an assessee. All those matters in the Indian context will become important to understand what is the tax advisory services which could be rendered and which may not be rendered. Then tax services including valuations. So valuations is also becoming important, and valuations, which is, as we say, valuation is more of is not exact amount, but it is more of an estimates, and based on certain projections in certain cases, like even the income tax law recognizes the discounted free cash flows as one of the methods for valuations, which is prescribed under the income tax rules, as well as now where it is only based on the net asset value as per the last previously available audited financial statements. So between the two methods which are recognized under the income tax law, you will agree that there is a wide difference between where a conflict could come in with the services being rendered by a tax auditor. So this is another area to be looked into. And lastly is assistance in the resolution of tax disputes. So these are the 5 categories. There are assessments, there are appeals, and as chartered accountants, we are free to appear till the levels of income tax appellate tribunals. And beyond that, it is the courts of law. Now, income tax tribunals are the final fact-finding bodies, and where chartered accountants with their knowledge of not only the tax laws but also the financial statements are in a better position to advise the honorable tribunals with respect to uh, all matters relating to the facts of the case. And question of law is what really goes to the higher levels in high courts and Supreme Court. So assistance in resolution of tax disputes in case of an audit client is also one category which we need to look at. So these are 5 broad categories where we would be looking at what is the proposed restrictions which would come in, and which we need to be careful about. So the first is tax return preparations. Now, preparing an income tax return does not really lead to a conflict with the audit. In the sense, if you look at audit under Section 44AB, it is an audit conducted we have a guidance note on tax audit. The guidance note very clearly brings out, gives very practical and very useful guidance interpreting the provisions of law, and also giving guidance in relation to the duties of auditors as envisaged under the applicable standards on auditing. It combines the two different provisions and gives the tax auditor the guidance which is required to be done. Having audited the financial statements, and based on those audited financial statements, if the income tax return is to be prepared, it is really based on historical information. It is information which has been audited, which has been prepared. The various disallowances have been carried out, have been looked into. And in fact, our tax audit report form 3CD is merely a computation of income. Every disallowances, every adjustments under ICDS are covered. The various provisions relating to business income, other sources, capital gains, depreciation, brought forward, carry forward of losses, everything gets verified by the tax auditor. And therefore, it leads to a situation which is very close to what is the final computation of income. So, having audited the financial statements, having issued the tax audit report, basis that once the return of income is to be prepared and filed, it does not lead to a conflict. And therefore, even the Code of Ethics internationally and within India says that providing tax return preparation services does not usually create a threat. So that is the perspective in which the return preparation work is looked at. And under the income tax law, the verification, which is a very important aspect of the income tax returns, the verification is done by the SSE. So if there is a mistake, it is the of say underreporting or misreporting, the penalty is on the SSE for the reason that the verification says that it is the SSE then undertakes and states that the contents of the income tax return are true and takes the responsibility for what is mentioned in the income tax. Since the responsibility is with the SSE very clearly, therefore, even if it is audited by the auditor, even the same tax auditor is preparing the income tax return, normally it does not lead to a threat. And therefore, I would expect that, and I would believe that the Ethical Standards Board would permit the auditors to be engaged in terms of tax return preparation. As the Honorable Chairman said, this is deliberations. And he has encouraged us to not only look at these provisions, give our views, and see that the collective wisdom of the profession is available to the Ethical Standards Board so that the right decisions in the interest of the profession can be taken. So tax return preparations would be one kind of an activity which could still be permitted under the new ethical standards which are globally, which are benchmarked with the global standards. Second is tax calculations for the purposes of accounting. So this is which is an activity which is done generally more on the global scale in other countries, not so much in India. But if any of our members is really involved in terms of calculating the amounts to be entered in the books of accounts. That would not only be contrary to these provisions which are coming in, but it could also be contrary to the existing provisions which are there in terms of our standards on auditing and the other applicable provisions of Code of Ethics. Because very clearly we say that the financial statements are prepared by the auditee. The auditor's job is to issue an audit opinion. And therefore, the notes on accounts which are given to the financial statements are also the notes which are prepared by the auditee or by the assessor. And therefore, as an auditor, we are not involved in terms of preparation of financial statements. We are not involved in deciding what is the amount to be entered in the books of accounts, be it tax provision or something different. And therefore, this is something which I believe most of us are not engaged in. And therefore, if this restriction comes in tomorrow, this is not what is going to create hardships for us, because this is something which we are already compliant with in terms of ensuring that the financial statements are prepared by the auditee and the auditor is issuing an audit report based on the applicable standards on auditing. Then the third item is, in the second item itself, there is, with respect to preparation of accounting entries, the Code of Ethics actually gives even more detailed guidance with respect to entities that are not public interest entities and which are public interest entities. Now, what is a public interest entity is not defined in the Code of Ethics. This is something which could be announced by the council at a later point of time. But generally, we say that entities which are listed companies, listed entities, or entities which are banks, insurance companies, or which have turnover or net worth beyond particular ceilings, which are considered as public interest entities, and others are the non-public interest entities. In case of non-public interest entities, the Code of Ethics even goes to the extent of saying that if a professional accountant is involved in determining the tax amount for the purposes of accounting entries, he can apply certain safeguards. And the safeguards could be to ensure that there is a different team which carries out the preparation or quantification of the amounts and a separate team which carries out the audit. Now, in context of most of the SMPs, it is the same team which would attend to an audit client. And even for the small and medium entity, you would also expect the same chartered accountant to deal with him and not have two different teams. But if that is so, if there are different teams, then this could still be applicable. This could still be carried out in case of non-public interest entities if the audit team and the tax team are completely different teams, and the tax team does the tax work and the audit team does the audit. In case of public interest entities, this would not be permitted, and therefore, in case of public interest entities, there is no, even if there are different teams, then the methodology, then this quantification of tax amounts for accounting entries would not be permitted. Now let's come to tax advisory services. And this is something very important. Now, certain types of tax advisory services are routine advisory services. If, for example, if I tell an audit client that if you buy an asset before 30th September, you get full year's depreciation. And if you buy an asset beyond for a period less than 180 days, if it is put to use, you get 50% of the applicable rate of depreciation. Now, this is a normal or a standard information which is available under the law, which is being informed to the client so that he makes the right investment decisions, keeping the tax benefits in mind. So this is one type of service, one type of advice. Second type of advice, simple routine advice could be that there is the law relating to deduction of tax at source. If the tax is not deducted and paid in time under 40A 1A, those expenses would be subject to disallowance. If the tax is not paid and during the course of the tax audit, the auditor finds that these are the items on which tax has not been deducted, advises the client to make that payment before the due date of filing of return of income. The amount is available for deduction even with respect to the year which has already gone by. So these are certain categories of advisory services which are actually informing the client the correct position under the law so that the client can take the right decisions and optimize the tax payments. As against this, there could be other category of advisory services. Suppose I am involved in advising my client in certain restructuring of the client's business, which could lead to certain maybe amalgamations or mergers or demergers in the business organizations, which could lead to certain assets being computed on a fair value and which could thereby lead to a reduction in the tax liabilities or any other complicated tax advisory services. So what I mean to say is that tax advisory services need to be looked into. What is the nature of the service which is being rendered? If it is a routine advice which is being given, which is explaining the provisions of the law clearly in terms of the applicability of those provisions to the business of the assessee, that is one category. And second is to involve in tax planning, whereby the future tax liabilities could be reduced by carrying out certain restructuring or readjustments or carrying out accounting for certain transactions in a different manner, which could lead to a reduction in tax liabilities. So you can clearly see that there are different categories of advisory services. So while the first kind of services do not really result in a conflict with the audit services, the second category of services would certainly lead to a conflict between the tax audit, between the role as an auditor and the role as a consultant. So where there is a conflict, that conflict is where the ethical standards would prevail, and ethical standards would require that the safeguard to that conflict would be that that particular type of services would not be. So I think we need to be very clear in our minds when we say that tax advisory services are going to be restricted. The normal routine advisory services to the clients are not really going to be impacted. If there is a decision of a jurisdictional tribunal or jurisdictional honorable high court, and basis that if certain view is being expressed, that say, for instance, we have very live practical cases where, say, the employee's contribution to provident fund is one very classic example which one could take for discussion. Of course, by virtue of the Finance Act 2021, that issue is now put to rest prospectively. But up to March 21, there is a debate and there are tribunal decisions which are coming in, mostly in favor of the assessees. Howsoever, there are decisions of certain high courts on matters relating to contribution of employees' provident fund if it is paid beyond the due date prescribed under the, say, the PF Act, but deposited before filing of the due date of the income tax return. Honorable Gujarat High Court has held against the assessee. Honorable Gujarat High Court has decided in favor of the department. Honorable Bombay High Court and many other high courts, Honorable Rajasthan High Court has held on the same issue in favor of the assessee. Now, if my client is based in Mumbai and if the tax auditor is advising the client that based on the decision of the jurisdictional high court, this amount which is paid beyond the due date of filing of the return of income, but due date prescribed under the labor law, but paid before the due date of filing of return of income is an allowable deduction as decided by the jurisdictional high court. And a client which is filing the return of income in Gujarat, the tax auditor is advising the client that this is not allowable as a deduction. This is the decision of the jurisdictional high court. Now we are fortunate friends, in India to have a guidance note on 44AB, which is a document which really gives us huge amount of guidance with respect to how an auditor should carry out his duties under such situations. So assuming there is a SEC in Gujarat, and because the matter is not settled before the Honorable Supreme Court's decision, and certain high courts have held in favor of the SEC, if the SEC wants to litigate on that issue, and if the auditor is to express an opinion on the financial statements or in the tax audit report, and if this becomes the subject matter of expressing an opinion, the tax auditor would be required to qualify on that account because it is contrary to the decision of the jurisdiction. If the tax auditor is in Mumbai, the SEC is filing the returns of income in Mumbai, in a similar situation, the auditor will issue a clean report because the SEC's right to claim deduction of that expenditure is based on the decision of Bombay High Court, which is the jurisdictional high court. And friends, as I sit in Madhya Pradesh in Indore, where there is no decision of the jurisdictional high court, following the decision of the Honorable Supreme Court in case of vegetable products, whichever decision of the High Court which is favorable to the SEC is being applied, and therefore the decision of Bombay High Court is preferred as compared to the decision of the Honorable Gujarat High Court. So in Madhya Pradesh, in a similar situation, the tax auditors would be required to give an emphasis of matter on such issues because it is not contrary to the law. Nevertheless, it is an important matter to be brought out to the notice of the tax auditor. So same issue, different states, different position of law till 31st of March 2021. And there is a proper guidance given in the guidance notes on such matters, when to qualify, when to give a disclaimer, and when to give an emphasis of matter. So I would say we are blessed in India that we have this guidance note on tax audit, which is not available worldwide, which is not an audit being done by the other professional accountants in different parts of the world. And therefore, they do not have this guidance which is there from the professional institute as to how to carry out their audits. So if a tax auditor is carrying out his audit in accordance with the guidance note on under 44AB, is carrying out his audit as per the applicable standards on audit, and is giving an advisory service, which is a routine advisory service based on the prevailing law, it does not create a conflict. But the conflict would be there if one gets involved in tax planning or using certain mechanisms which could create a conflict with the role as a tax auditor. So that is what needs to be distinguished. So broadly speaking, this is going to be an area where there are restrictions going to come in. And I would believe, for one, that normal tax advisory services would continue to be permitted. However, one should be very careful in seeing what service, what kind of advice is being given, and does not result in a conflict with the audit function. Then friends, finally we come to this concept of valuations. And valuations, as under the income tax rule 11A, we have two methods which are recognized under the income tax rules. One which is based on the net asset value, and one which is based on the discounted free cash flows. Now, under the income tax rules, assume that the auditors have not been recognized to carry out the valuations basis the discounted free cash flow methods. But considering that, say, maybe for FEMA purposes, where any of the international practices of valuations are accepted and the statutory auditor's valuation is also accepted, there is no restriction. But under income tax, if it is based on the net asset value, if it is based on, say, the audited 31st March 22 amounts, and basis that if the amount is to be, valuation amount is to be determined, that by itself does not lead to any conflict. That does not lead to any conflict between my role as a valuer and my role as a auditor. But generally, the valuation methods are where not just the net asset value method, other valuations could also be possible. And therefore, it is normally believed that valuation for an audit client would lead to a conflict. And therefore, even under Section 144, we have this provisions with respect to non-audit services, including valuation services. So valuations would be one service which would not be permitted under the tax services, under the new provisions on taxation. But these are not some such kind of services which would affect the small and medium firms rendering services to small and medium entities. Our largest concern is the interest of small and medium business houses. They are being served majority or largely by small and medium practicing firms. So we are not saying that it is in the interest of small and medium practicing chartered accountants, but more so in the interest of small and medium business entities that their requirements should not be put to such a situation that they have to go to multiple professionals for same kind of work. But valuation would be one area which could be affected in terms of what is being proposed to be brought in. So largely, I believe that there would not be too much of a problems which would be there for majority of the chartered accountants. And friends, finally, we come to this issue relating to tax audit services. Now, in the tax audit, with respect to tax disputes, now, tax disputes is assessments. Today, they are faceless assessments. Appeals are faceless appeals. Income tax appellate tribunals are where there is a physical hearings which take place, or even virtual hearings which take place, but which are not faceless as of now. One of the threats which is recognized, which creates impairment of the independence of auditors, is an advocacy threat. Am I advocating, or am I advocating a particular view of an assessee of my audit client? And if the auditor is doing that, it creates a self-advocacy threat. And that is recognized as one of the threats which could result in reduction or impairment of the auditor's independence. Therefore, tax disputes need to be looked at in a different manner. So, insofar as assessment proceedings are concerned, I think there should not be any difficulty because the financial statements are already audited, and based on those audited financial statements, the information, which is a historical information, is being provided to the tax authorities. Now, in the course of assessment, certain additions are made and there are certain disputes which take place. Then, even before CIT appeals, it is more likely a view can be taken that it is not going to result in a advocating the views of the assessor. But when the matter goes to the tribunal, and more so in case of a public interest entity, it is there where I fear that the restrictions could come in, and restrictions may also be justified. Take, for instance, a case of a listed company. In case of a listed company, if the matter is before the assessing officer or before CIT appeals, it is not really resulting into a situation which is creating a conflict with what is the view of the assessee and what is the departmental view. But before the tribunals, and the word used in the International Code of Ethics is appearing before a court of law. Now, in the Indian context, as chartered accountants in practice, we cannot appear before a court of law. But somewhere a court of law could be a jurisdiction like income tax appellate tribunals. And there, in case of public interest entities, there could be a threat in terms of resolution of tax disputes for the audit clients. And in such cases, there would be a restriction or a prohibition on carrying out such services to the audit clients in terms of appearing before the appellate tribunals. And it would be useful if the Ethical Standard Board gives more guidance with respect to these practical aspects as to appearing before assessing officer in a faceless scheme as it exists today. Or in some cases, there could be physical hearings also. Not that in all cases it is physical, it is faceless hearings. But in case of appearance before the Commissioner Appeals and in case of appearance before the Income Tax Appellate Tribunal, and similarly in relation to the GST law, tax disputes is not merely restricted to the income tax law. I mean, it is also with same principles would apply even if it is a dispute under the GST law. So therein, if there are specific FAQs which are issued by the Ethical Standards Board, it would be very helpful in terms of ensuring compliance with those specific issues of what is doable and what is not doable. So I would stop here. There are certain questions which I had picked up thanks to our Ethical Standards Board team, which helped me in picking up these questions. But I think I can take them later on. We have still a very important topic on NOCLAR, which is being deliberated by none other than our former chairman of Ethical Standards Board and sitting council member Ranjit ji. After that, subject to the permission of our moderator CA Raj Chawla ji, we can take questions. Thank you very much for this opportunity.
Thank you so much, sir, for this wonderful session. Now I would like to invite Sir Ranjit Agrawal, Central Council member, and he's a chairman of Committee for Members in Industry and Business, chairman of Taxation Audit Quality Review Board, deputy convener of Center for Audit Quality Directorate, and member of various standing committees and non-standing committees of ICI. Sir, may I request you to please take the session and enlighten the participants about the provisions of the NOCLAR. Thank you, sir.
Thank you very much. I am not able to share the screen. Screen is there visible?
Yes.
No.
No, sir.
No, Ranjit bhai, screen is not visible. Only one logo, small logo is coming. Rashmi, can you please help him?
Yes, sir.
Ranjit bhai.
Anyway, let's
either you send your PPT to the office. They will run the screen. They will run your PPT.
Okay. By the time, let's start. Thank you very much, CA past President Manoj Phadnis sir, for very nice deliberation on the taxation aspect, which is the third element which we have deferred for the time being, including NOCLAR and fees structure. Mangesh Bhai, chairman of the ESB, Raj Chawla, member of this ESB, and my vice chairman of the committee for member in industry and business, and all the learned participants. Good evening to all of you. After a threadbare discussion on this important topic of taxation service, we are going to discuss again the second most important topic is the NOCLAR, non-compliance of other laws and regulation. And before that, friends, I would like to tell you that Code of Ethics is one of the mandatory compliance requirement as far as ICI Act is concerned. And since Code of Ethics is a council guideline, so every member in addition to CA Act, CA regulation, accounting and auditing standards, Code of Ethics is also required to be mandatory, followed by each and every member of this profession. Before starting this topic, I remember the opening remarks given by our late past president, C.R.C. Cooper. And while placing this formal code of ethics in the council in 1963-64, he has said that in the larger interest of the profession, the council exhorts all members to search their hearts and concise whenever they are in doubt, and thereby assist towards the maintenance of high principle of professional conduct established by this council. So this professional conduct and the ethics is the foremost and paramount importance for every member while discharging their duty. As far as this NOCLAR is concerned, you might be aware we have Standard of Auditing 250, SA 250. And this SA 250 was made applicable from 1st of April 2009. And this SA 250 talks about the consideration of laws and regulation while doing the audit of a financial statement. And this SA 250 is applicable on each and every entity, whether it's a listed or not listed. So there are two aspects of this SA 250. One is the management will ensure that the laws and regulations applicable to that particular entity is complied in letter and spirit, and the auditor has to sit with the management, inquire about the various laws and regulations applicable to that particular entity, what are the compliance, what management representation they are taking. And auditor has two important roles in here. Although management is responsible for compliance of the laws and regulations applicable to the entity, but there are two kinds of laws which may be applicable to the particular entity. One is the direct and another the indirect. So when we talk about the direct effect on the material, amount, and the disclosure in the financial statement, like taxation, labor, pension, there are so many examples that have been given in the standards which has direct impact on the amount and the disclosure in the financial statement. So the auditor has to ensure the compliance of this law. And there are other laws which may not have the direct impact on the financial statement, but the compliance of them is have material impact on the amount and the disclosure in the financial statement. Like the example has been given in the standard is the operating license of the entity, regulatory solvency requirement in the state or a country they are operating. What are the environmental regulations applicable to that particular entity? Pollution Control Board mandates what they say, the local state laws. So there are some indirect law which might have impact on the financial statement of the entity. So the auditor has to ensure the compliance of both these aspects. At the same time, these standards talk about the auditor has to remain alert throughout the audit for the suspected non-compliance. And they have used the word that auditor has to use the professional skepticism while doing the audit process of the financial entity throughout the duty as required by, we have SA 200, which talks about the professional skepticism should be prevalent and present throughout the audit process, which is the requirement of SA 200 also. So this is the standard of auditing of 250, which talks about the laws and regulation applicable to particular entity and the compliance of that and the role of the auditor in that part. After this 2009, in 2016, ISA 250 has been revised. So International Standard of Auditing issued by the IFAC of the ISBA and other entity which they have issued the ISA 250, they have revised by IAASB. And in this ISA 250, they talk about the various non-compliance with laws and regulations, various provisions of the ISBA Code of Ethics at various places. Now, these revised ISA 250 has not been adopted by the ICI, and that's why they have not revised the SA 250. So going back to 2016 to 2019, we could not revise our SA 250. So then chairman of the Ethical Standard Board, CS Sanjeev Chaudhary sir, he took this initiative to revise this code of ethics, to align our code of ethics with the international code of ethics, because last 10 years, our code has not been aligned with the International Ethical Standard Board of ICI, of IFAC. So this ISBA code, we are following since of the last update is 2005. So this 2018 ISBA code were aligned with the ICI code of ethics. And in 2009, we have brought this NOCLAR provision in our code of ethics. And India being a developing country, and if the country want to prosper and be in the list of the developed nation, you have to follow the international norms and standards. And that's why this ease of doing business, the world ranking and all these things, if you want to place your country in that position, you cannot aloof from not complying the international standard. So on the advice of the Ministry of Corporate Affairs also, and the initiation taken by CS Sanjeev Chaudhary sir as a then ESB chairman, our code of conduct was revised, and this NOCLAR, the fees structure and this taxation aspects, including other aspects, came into the place. But because of this COVID and other issue, these three provisions were deferred since last 2.5 years. And now this, as rightly told by current chairman Mangesh Bhai, that we are planning to implement this all three provisions from September or October 2022. So in that context, this NOCLAR provision has become more and more relevant in the sense that this NOCLAR provision of ISBA, which Code of Ethics apply to audit and other professional services, and they apply to audit of all entity. So we in 2009 had implemented and aligned our Code of Ethics of NOCLAR with ISBA with some carve out. So we have not made this NOCLAR provision applicable to all entity, but only public interest entity. We have not made it applicable to audit and other professional service, only auditing service we have made it applicable. But in ISBA, this NOCLAR is applicable to audit and all professional service and all entity. But in India, we have made this NOCLAR applicable on only public interest entity and only on the audit services. This ISBA, International Ethical Standard Board of NOCLAR, also have revised their ISA 250, which has contained ISQCI, various ISA, ISRE 2000-2400, ISAE 3000, ISAE 3402, ISAE 3410, and ISRS 4410. But in India, we have not adopted these other services because our NOCLAR is not applicable to other services. So that's why adoption and revision of these standards were not required as of now. But there is a debate is going on to ISA 3000 also should be made applicable when certification work is there. So ISBA, ISE should also be applicable in India. But since debate is there and we have not implemented so far. Now this NOCLAR, in addition to SA 250, which we have made applicable in India, and prospective date maybe from October or September 2022, Section 360 of our new Code of Ethics talks about responding to non-compliance with laws and regulation during the course of audit of engagement of listed entity. So we have defined what is the PIE, public interest entity, on which this NOCLAR as per 360 will be applicable. And as I told you, it is applicable only on audit assignment and not on other professional services. What can be the example of non-compliance with laws and regulation? There may be a fraud, there may be a corruption, bribery, money laundering, terrorist financing, and the use of proceeds of this crime, securities market and trading, data protection, banking and other financial products and services, tax and pension liability and payments, environmental protection, and public health and safety. These are the examples has been given in our section 360. These are the example on which non-compliance may happen, and what is the role of the entity, management, those charged with the governance, and the auditor. So these in detailed way, this NOCLAR provision has been prescribed in our new code of ethics. Now, who will be responsible for this non-compliance, or which are the prevailing laws or regulatory committed by which are the parties on which this NOCLAR provision will be applicable? There may be a client on which you are doing the audit, those charged with the governance, management of a client, or other individuals who are working or under the direction of the client. Mind you, this NOCLAR is not applicable on the personal misconduct, which are personal misconduct of the management or the client, which are unrelated to the business activity of the client. So the personal misconduct not related to the entity of the management or those charged with the governance are not covered in NOCLAR. So the client, those charged with the governance, management, or other individual working, they are responsible for the compliance of this NOCLAR. Now, as a auditor, when we talks about this non-compliance of other laws and regulations, so when we sit with the management or those charged with the governance, as the case may be, and if a auditor, which in our new code of ethics, auditor has been defined as a professional accountant. So if the professional accountant identify or suspect that non-compliance has occurred, or they might occur, either they have occurred or they might occur, then the professional accountant will discuss this matter with the management or those charged with the governance, as the case may be. And if he is convinced that there are non-compliance of these laws and regulations, so he can discuss with the management, he can take management representation, he can take his opinion, and if the management and the auditor are not sure that what is the implication of this non-compliance, so they can also refer this matter for a legal advice. And when this legal advice is sought by the management on the advice of the auditor, so this legal advice will form the basis of the existence of the non-compliance. There may be a case where an entity, a group company, holding or subsidiary may be listed on a stock exchange, of which you are doing an audit as a professional accountant. So it is the duty of the professional accountant also to communicate with the group auditor or a holding company auditor of which subsidiary of which you are doing the audit. So if a group work is there and this non-compliance of one component is there, so other component, the auditor should be communicated by the auditor. Now, what action, what is the recourse now for the professional accountant when he sees and discover that there are non-compliance in this entity? And when this non-compliance is there, he can deliberate on the what will be the legal and regulatory framework of this non-compliance, how urgent this situation is, that non-compliance is there, and how this going to affect the entity. What will be the pervasiveness? What will be the pervasiveness of the matter throughout the client? Whether the professional accountant will have continue to have the confidence in the integrity of the management or those charged with the governance. Whether once he has discovered there is a non-compliance, and now whether he can have the confidence in the integrity of the management and allow these things to happen, or non-compliance or suspect non-compliance are likely to occur in future also, or he has the credible evidence or actual or potential substantial evidence which is substantially harming to the interest of the entity, investor, creditor, employee, general public and various other stakeholders. So if the existence of this non-compliance and the future occurrence or continuing confidence in the credibility of the management, and what will be the impact of this non-compliance on the various stakeholders. These are the issues which a professional accountant has to deliberate in detail. And then he has to decide his next course of action. There are maybe stages where this non-compliance may be bound to be communicated to the third party outside the entity. There might be a situation. The professional skepticism of the professional accountant will decide how he wants to take this non-compliance issue forward, whether he wants to communicate with the professional institute or a third party or a regulator or a government or the regulator applicable to that entity. This is the professional judgment he has to take. And based on this professional judgment, I will tell you, there might be a situation where he will be forced to disclose this matter to a appropriate third party. Like if he feels that there is a entity engaged in the bribery case, the local or a foreign government officials, they are giving the bribe for securing the large contracts. The entity is listed on the stock exchange, and this act or non-compliance of that entity might pose a systematic risk to the financial market. Entity is selling the product which are harmful to the public health and safety, or entity is involved in promoting a scheme which are assisting his clients to evade the taxes. So loss to the national exchequer. So these are some of the examples on which the professional accountant will be forced to disclose this matter to the appropriate authority. Now, as I told you, in this situation, when you have existence of the non-compliance and you have discussed with the management, those charged with the governance, and you are not able to take a remedial action or remedial process or remedial points suggested by the management not acceptable to you, then you have two choices. Either you can disclose this matter to the appropriate authority which is outside the entity, or you can withdraw from the engagement. Now, withdrawing from the engagement or resigning from the audit is not a solution so far. But if you are not interested to continue the assignment in spite of the addressal of the issue raised by you, by the management or those other, so you can resign. You can resign by citing your concern. But it is your duty. If you see this, our new code of ethics, clause 8, part 1, schedule 1 talks about the communication with the previous auditor. And in this clause, we have added a new paragraph which says, if the incoming auditor writes to the outgoing auditor, please let me know what are the non-compliance in the entity in which you were auditor of last so many years. And if the outgoing auditor received the request from the incoming auditor in writing about this non-compliance issue, it is the duty of the outgoing auditor to provide this non-compliance issue to the incoming auditor diligently. So this new paragraph we have purposefully added in our clause 8, part 1, schedule 1, where you are communicating with the previous auditor. So either you can disclose this matter to the authority, or you can withdraw from the assignment. While withdrawing, it is your duty to provide this non-compliance issue to the proposed accountant. There is another very important provision in this NOCLAR which says documentation. In our new code of ethics, entire new code of ethics, more emphasis has been given on the documentation. Earlier in 2009, our code of ethics there is a small paragraph of code of ethics, documentation. But in this new code of ethics, each and every section, a separate paragraph has been inserted at the end of every section, how you want to document, how a chartered accountant while doing the audit should document their working. And they have expressly written 4 or 5 parameters, like what is the KYC of the client, how a small paragraph about the history of the client, the KYC of the client. KYC of the client is also applicable from 1st January 17, where the council has given 2.5-page format where all the detail of the client should be inserted, and that should be the first working paper file of the audit working paper. So it should be the first paper KYC of your client, and it has been made mandatory by the council from January 17. So history about the client, what are the accounting and auditing standards applicable to the client in course of audit, what are the issues raised by you or discussed by you with the client, how your issues were addressed by the client, and what professional skepticism or professional judgment you have taken after receiving the reply of the client. So on these 5 broad parameters, you have to keep every file document in a very, very proper way. And that's why if you talk about the disciplinary proceeding or the NFRA, now first thing they are asking in case of any investigation or inquiry, please give us, share with you the audit working paper file. So if this audit working paper file has become the backbone of the audit, earlier it was also there, but in this new code of ethics, we have written in a very deliberately and very expressly, we have written documentation is mandatory. So in this NOCLAR, this documentation of NOCLAR, where how you have interacted with the client about the non-compliance, what is the answer of the client about this non-compliance, what judgment and the decision you have taken after taking the view of the management or those charged with the government, or whether you have reasonable and informed some third-party test you have undertaken. All these things you have to document properly, and these documentation are in addition to what essay talks about the documentation. So you have to prepare a documentation sufficient to enable an understanding of the significant matter arising during this audit, and the conclusion you have reached, professional skepticism you have applied, and significant professional judgment while reaching this conclusion has to be deliberated, documented in detail. And this will be your savior in case of any fraud or something happen to that entity. And if you have documented these things in a detailed way, this will come as a savior to yourself. So these are the some of the important aspects of this NOCLAR provision, which has been deferred for the time being. We have this NOCLAR provision, I told you, has been made applicable, or revised code of ethics has been made applicable with some carve out, as it is only for SA 250, it is applicable listed entity or public interest right now. And more importantly, these NOCLAR provision as per section 260 of this code of ethics is also applicable to those members who are in employment with the listed entity. So those members who are in the senior position with the listed entity or public interest entity, equally responsible for the compliance of the various laws and regulations of that particular entity. When we talk about how the CFO, CEO, and the senior management who are a chartered accountant in the various corporate, and how this NOCLAR, we can have a separate discussion. But as I told you, this is equally applicable to them also. Now the issues are, what are the issues? We have SA 250, we have NOCLAR provision, which are going to be implemented soon. So SA 250 is applicable to all entity, where NOCLAR is applicable on only public interest entity. So we have to revise our standard of auditing 250. Now, there are various provisions in this NOCLAR which talks about additional responsibility beyond the SA and AS by the professional accountant. So if there are additional responsibility in this NOCLAR which is traveling beyond the mandate given by our standard of auditing or accounting standard, so we have to consider this aspect while revising this SA 250. There are issues like when you are discussing with the management of the various non-compliance. So there are some non-compliance or some issues which may not be applicable or may be prohibited by the law. Management is not mandated to discuss with you. There are some issues. So how to deal with this issue while revising our SA 250? When you are reporting to the third party or appropriate third party be outside the entity, what should be the concern? How to define those third party? How we should give a guidance to our member? What should be the third party? How you can approach them? On what condition? What are the points beyond that you cannot continue and you have to report them? So all this guidance has to be given to our member while revising this SA 250. As I told you, there is an enhanced documentation in our NOCLAR, which are in addition to SA. So when a professional accountant is supposed to comply and implement the SA and AS in the entity, and when this NOCLAR provision demands or desires, they have to document further. So on that line, we have to revise our SA 250. And there may be a situation like auditor has been made aware of some of the non-compliance by a whistleblower mechanism. In course of audit, he has not, while doing the audit, he has not come across any non-compliance, but there are whistleblower mechanism by which he comes to know some of the non-compliance. There are various laws and regulations which prohibit public disclosure of some issues by the management, those charged with the governance, or by the professional accountant. So how to deal with this issue? So on the line of this NOCLAR, we have to revise our SA 250, which we have not been able to revise so far. And fortunately, I have been given the task by the current WSB chairman. They have formed a group to how to present to the council this revised SA 250, which will be first cleared by the WSB, then by the council, then by the NFRA. So these are some of my thoughts on the various aspects of the SA 250 and this NOCLAR. And mind you, we should not desist or we should not shy away from accepting or adopting the international best practices, which we can also apply in India. And India is on the path of a developed country, $5 trillion, $10 trillion, the targets are coming. And we have the robust financial mechanism, we have a robust auditing structure, and we have the robust financial system in this country. And if we can apply the international best practices also in India with the help of the ICI and the other regulators, so India can achieve a huge milestone in the world ranking, the ease of doing business, the other thing. So we as a professional has to advocate implementation of these best international practices in India also, whether it's a NOCLAR, whether it's a taxation service, whether it is a separation of a audit and non-audit service. So all these issues are debatable issue, but we as an institute, as a member, has to deliberate, and so that we can be a leader in the accounting profession. We can also advise the government as a ICI. These are the standards which should be implemented in India if you want to have a discipline and a focus financial system in this country. And that's why in this line, NOCLAR should be implemented sooner or later by the council. And that's why this SA 250 has to be revised on the line of the NOCLAR. So these are some of my thought process on the NOCLAR and SA 250. We can take the question answer as the questions come. Thank you very much.
Thank you, Ranjit bhai.
Thank you so much, sir, to enlighten the participants about the provisions of the NOCLA. Now I would like to request Sri Raj Chamla, sir, Council Member ICAI. He's the Vice Chairman of Direct Tax Committee, Committee for Members in Industry and Business, Committee on MSME and Startup, to please take the session further and take the question and answer session. Thank you, sir.
So first, thank you. Now, first I will take the questions. So, sir, Ranjit sir, our first question is: NOCLAR is applicable to employees also. As an employee, chartered accountant is regard to have whistleblower policy of the employer. And
no,
yes, sir.
Employee, you are talking with the paid assistant in the CF firm or employee in a company?
Employee in a company. The question is NOCLAR is applicable to.
Yes, as per section 260 of the Code of Ethics, NOCLAR is equally applicable on the employee of a listed entity, public interest entity. They have given a category of the employees, senior management, all these things they have given. But right now, those employees who are in the senior position, who has some decision-making power. So if those employees are a chartered accountant, this NOCLAR is equally applicable to them also.
Sir, second question is of law which do not impact financials of the company must be looked into by auditor. What kind of laws which do not impact financial of the company must be looked into by auditor?
That's why we are in the process to revise our SA 250, where financial, non-financial, as I told you, this NOCLAR provision is says that in course of audit, if you come across any non-compliance, then it is the duty of your professional accountant to address this issue with the management. And they have given a parameter and the steps how you have to follow. But what other non-compliance, other law you have to see that we have to give a guidance. In my opinion, it is not like any non-compliance you have to see. When you as an auditor, and if you come across this non-compliance, you have to report. I request Manoj sir to add something in this point.
Ranjit bhai has explained NOCLAR so well. I'm sure this will enable all members to believe rightly that compliance with NOCLAR is not as difficult as many a times it is thought to be so. As rightly mentioned, NOCLAR requirements would be applicable where there is something very important non-compliance which can affect even the going concern of the entity. One such example which comes to my mind is, let us say, a case of a company which is engaged in real estate business. Now, there is certain area which is permitted to be constructed as per the building maps which are approved, and those maps are today even required to be registered with the state level RERA authorities. In many, or let's say in some of the cases, it is observed that the construction is much beyond what is the permissible level. Now, here could be an issue which the auditor of a listed company which is engaged in such kind of a construction activity to look into and see that the money is being booked in the books of the company, the receipts are coming in, the payments are being made. So if the builder is selling a flat on a floor which is not permitted by RERA, could it be a matter of non-compliance which is required to be reported under NOCLAR? So these are, I'm not saying that this will require to be reported, but just as an illustration to understand. In many of the cases, the auditor will not come across situations of terrorist fundings or money laundering. These matters may not really come while carrying out a normal audit of financial statements. But I believe in some cases where the financial statements will indicate that there is no compliance with the law is one example which I have seen in matters relating to real estate companies. So in such matters, the auditors will have to be more careful and see that, as was so rightly mentioned, what is the reporting requirement under SA 250 and how that reporting requirement under NOCLAR may get applicable in such cases.
Thank you, sir. And the last question on this NOCLAR, what is the mode of maintaining proof that are as compiled with provision of NOCLAR?
Mode of proof.
Yes, sir. What is the mode of maintaining proof that are as compiled with provisions of NOCLAR?
It is same like SA 250. We have to take the evidence from the management in the form of an MR or the documentary evidence. What we have to keep as a documentation aspect. So in the same way, we have to keep the NOCLAR requirement also. It is not a beyond SA 250 requirement you have to give, but it's a case of a proper documentation should be there. Wherever you management is responsible, we have to take a MR from the management, and wherever additional evidence you can garner from the third party or other, that you have to gather and properly document in your audit working paper file. But I'm telling you, this documentation is going to be a savior to the profession. So if you are doing yesterday also this one of the auditor has been firm was banned by NFRA in Prabhu Leela, some company. So they have gone through the audit working paper file first. They have seen what professional judgment you have exercised while doing the audit. Based on that judgment they have taken. So your audit file will speak about yourself, your audit. So this documentation is very, very important for all discharging your professional duty.
Thank you, Ranjit Bhai. Now the question to my president, sir. Are not those restrictions of taxation services is detrimental to the exercise of SMPs?
I don't think so. We should always remember that the audit is a noble profession. We are given the right and the duty to express our opinion on true and fair view of the financial statements. And audit, though it is a contract between the auditor and auditee, but the work done by the auditor is relied upon by a third party. That is the stakeholders, the banks, the creditors, the employees, the government, and so on and so forth. Therefore, the independence of the auditor is important. And wherever it is felt by the society at large that the independence is being compromised, it is important that the profession should demonstrate how the independence is being maintained. So this will be only in the interest of the audit profession. And when we talk about the interest of the audit profession, the interest of the SMPs will be there more so because otherwise it may lead to curtailment of the audit. In that perspective, we should look at these new provisions.
Thank you, sir. In case of statutory bank or branch audit, the statutory auditor are required to do tax audit as well along with the statutory audit, as the assignment and fees are bundled into one. Trust such auditor are not infringing an provision of Code of Ethics?
No, I don't think so. And Ranjit Bhai can explain that in more detail. But if we are talking about statutory bank branch audits, as I understand, and where the bank audit, branch audit, and tax audit is being done, there is no conflict. and by just having a fees being decided together does not lead to any conflict of interest.
Rightly said, sir. Rightly.
Sir, some questions are from you on taxation services. Whether a partner of CA firm can sign tax audit report on behalf of another partner of a firm, whether it will impact on limit of tax audit assignment permissible by the ICI?
So it will not. The limit is dependent on the number of partners in a firm, and as the current guidelines of the institute provide for, depending on the total number of partners in the firm, even one partner can sign those tax audits. However, given the standards on auditing, given the requirements which we are required to look into, there should be very clear identification in the audit documents, as Ranjit Bhai just mentioned about how audit documentations will be the savior. Today we have a tax audit quality review board, with the chairman is with us in this webinar. So these are all matters which are being looked into. So let us be very careful in carrying out the audit. It is not a time that somebody can come in at the end of the audit and just sign the audit report. He has to take the full responsibility of the audit which has been done. So please look at it from the larger angle of compliance with the auditing requirements.
Thank you, sir. Now, would like to understand whether contingent fees can be charged for taxation services when provided to non-audit clients?
So generally, no. Contingent fees can be provided, can be charged only in certain specific circumstances which are even listed out under regulations. We have a regulation 192A, I think, wherein contingent fees is discussed, and only in those cases contingent fees can be charged. But we should bear in mind that if the fees is charged based on the quantum of, let's say there is an appeal, and basis the addition, say the addition is of say 1 crore, and basis the addition if the fees is charged, that is not a contingency. That could be said to be a measure to decide the quantum of work involved, and therefore you take that as a parameter to decide the fees. Contingency will be if the fees is charged based on the outcome. So if somebody charges fees that the addition is of 1 crore, whatever relief you get, you give me 20% of that relief. That is a contingency, and that is not permitted.
Thank you, sir. We are currently appointed as taxation consultant and doing accounting of one of the company for financial year 2021. And recently they have called quotation for statutory audit for financial year 1920. Is there any ethical issue for doing statutory audit?
So if one is only a tax advisor, tax consultant, and is to be appointed as an auditor, there is no conflict. But as I heard the question, even for accounting work, if you are engaged as an accountant or as an internal auditor, then you cannot be an auditor.
Okay. Thank you, sir. A private limited company has approached me to deal with their client on consulting them in matter of taxation and financial planning. Under that, I will be paid a fixed amount of money for the consultancy, and they can ask me to give my consultation as and when required. So can I accept such task, keeping in mind the professional ethics?
So tax advisory services as of now is permitted. Financial planning, please look into it very carefully. It may be something which may not be permitted.
Thank you, sir. An individual assessee has not liable for tax audit in last 2 years. That is financial year 17-18 and 18-19, and thus no audit was conducted. Is it still required for the present incoming auditor to communicate with auditor who has audited the individual assessee for financial year 16-17? Tax audit has been conducted in last 2 years. no tax audit has been conducted in last 2 years.
I would request for comments from even Ranjit Bhai of this issue. But personally, I would believe one should communicate with the last known auditor of that entity.
Yes.
Sir, it is already written in our Code of Ethics, Clause 8, Part 1, Schedule 1, last previous auditor. So the previous auditor who happens to last audit, being the auditor of that entity, you have to communicate with him.
Right.
Yes, sir. Thank you, Ranjit Bhai. Can a tax auditor represent his client in income tax assessment proceedings?
As of today, yes.
Okay. Thank you, sir. Can a member assist review tax, TDS, income tax or GST returns being filed by company where he is statutory audit or he is auditor under Income Tax Act? Can the taxes be paid by such auditor online if the client is not conversant with e-payment?
Payment online on behalf of the client is not prohibited. If the client has paid the money in advance to the SSE, to the auditor, there is a requirement under our Code of Ethics that if the money is kept with the auditor, he should keep it in a separate bank account, particularly if the money is for a long period of time or large amount of money is involved. So even if the payment is made online in advance and then subsequently reimbursed by the client, that to my mind does not create a conflict.
Thank you, sir. Can statutory auditor furnish an income tax return of the assessee and get the assessment done? This is the same question as asked.
Today, yes, it is permitted.
Whether
And
internal yes,
Raj Bhai, we have already given in our new Code of Ethics administrative service. And expressly we have written the filing of the various return of the audit client. Since these are not opinion or making a comment on this data, so we can take this data, upload with a digital signature. It has been permitted and it is written expressly in our new Code of Ethics book.
Thank you, Ranjit Bhai. Whether internal auditor of an entity can undertake various taxation services? Internal auditor can
tax
take
service, yes. Tax audit, no.
Internal auditor.
Internal auditor cannot be a tax auditor, but internal auditor can render tax advisory services.
Yes, sir. Yes, sir. And the last question, sir, whether a partner of a CA firm can upload the tax audit report signed by the deceased partner of the firm?
So this is one issue which Ranjit Bhai, your board has clarified that yes, in such cases, particularly in case of COVID, this has been permitted.
And the same issue is pending with the UDN also. The balance sheet signed, UDN could not be generated, partner died. So how to do? So on the same line, we are permitted for UDN also.
Okay, thank you.
So thank you, sir. This was the last question. And now I propose the formal vote of thanks to both my speakers. So it has indeed been a very fruitful discussion on the deferred provision of the Code of Ethics. I am sure that the program will help the member in practice and industry in understanding the said provision and implement them as and when they become applicable. The more the knowledge and understanding, the lesser is probability of violation. I thank CA Manoj Fadnis ji, past president and my president. Not only past president, because in his tenure I was the chairman of NIRC.
Oh, great.
Who has made valuable point in the topic of taxation services on audit clients. The topic is indeed very significant for the auditor and always evolving. Thorough guidance on the topic has been very useful. I am also thankful to CA Ranjit Agarwal, my chairman of CMIB, for his wonderful depiction on the issue of NOCLAR. He has presented the topic very well. He had chaired the Ethical Standard Board at the time of revision of Volume 2 and 2nd and 3rd of existing edition of Code of Ethics, and keeping in mind the guidance required by the member on the particular issue. The disclosure has really been very useful for members. I thank Chairman Ethical Standard Board, CA Mangesh Kinare ji in absentia, for conceptualizing and organizing this program. I thank all members watching this program. All those who have some question have been able to ask at this form may send the same on esb@ici.in, keeping watch for the forthcoming program of the Ethical Standard Board. And I am also thankful to the Secretariat of our ESB, Ashish ji, and all his team for organizing such a wonderful program. So thank you all. Thank you very much.
Thank you very much, Rajbhai. Sir, thank you,
Thank
past
you so
president,
much.
sir.
Thank you.
I have been
Thank you,
enriched with your deliberation, sir.
Thank you so
very
much, sir. Same here. Thank you.
Thank you.
Thank
Sir.
you. Thank you.